Chris, are you
Hi,
there?
everybody. Yep, I sure am. Hi, everybody. Welcome in. This is Chris Davis. Want to welcome you all to this MicroFutures Advantage webinar sponsored by FFR Trading and featuring market expert Luca Fischini. In front of you on your screen, you see the standard risk disclaimer. Of course, you've probably seen a few of these before, but as you know, all trading involves risk, and it's always a good idea to be fully appraised of those risks. So go ahead and look that disclaimer over. And as you do, I'll go ahead and lay out what we're going to do here for about the next 45 minutes. First of all, I'm going to tell you a little bit about this program and who Luca Fischini is. Then I've got a quick poll that I'll put up for you to let us know what your level of trading experience is, just so we can calibrate the presentation a little bit. And then I'll turn it over to Luca, and he'll go through his presentation. Be about 20 minutes, 25 minutes tops. And then when we're done, we'll take some questions and answers. You do have a question and answer form there on your GoToWebinar panel. So feel free to click on that, enter your question. While Luca's presenting, if I can respond individually, I will. Otherwise, we'll take those questions at the end. But yeah, so getting ready to move ahead here. We're going to go ahead and talk about Luca Fischini. And go ahead and advance that slide, Luca. So Luca is recognized by his peers as a leader in the trading field, both here in the US and internationally. Of course, he challenges conventional assumptions, develops innovative ideas and systems for trading in a variety of markets and financial instruments. Now, over the 20 years of trading experience that Luca has, he's learned from his mistakes and the mistakes of his clients and other so-called gurus, working as a commodities trading advisor, a futures and options broker, a system developer, a prop trader, and a market analyst. And Luca is also a published author and speaker on the topics of stocks, options, futures, forex, and commodities. So he's created and tested hundreds of systems and methods, from market profile to spread trading, complex options and futures strategies. And with this deep professional background, Luca does have expertise in all areas of brokerage management, risk control, order placement, and trading advisory. And he's brought all these skills together to put together a new program for trading the MicroFutures contracts, which as a perfectionist, he's created the most robust systems possible, 110% tested before going live or releasing them to the public, which of course is what we're doing here today with the MicroFutures program. So before I hand it over to Luca, let me put this poll up. Go ahead and quickly let us know what's your level of trading experience. If you're an advanced trader who's been in the markets for quite some time, actively trading on a regular basis, that would be the answer. Intermediate means you're in the markets, you've done some trading, but still gaining experience. And as a beginner, of course, just getting started. So we'll give you another minute or so to complete that. Alrighty, got most of the votes in, so I'm just going to go ahead and close the poll and share those results real quickly. There we go. Luca, you see we've got a number of intermediate traders, some advanced and a few beginners in the crowd. So with that, I'll turn it over to you and you can get started with your presentation. Ladies and gentlemen, introducing Luca Fischini.
Chris, thank you very much for your presentation. I'm sorry, I just clicked twice the same slide. So thank you for attending the webinar today. I really appreciate all of you coming to the webinar. I think the MicroFutures represent a big advantage for the small trader and for the small investor. And what I did is create a portfolio of systems with the available MicroFutures that are currently available through the CME. So again, there are some of you that maybe are beginners and some are intermediate. Some maybe don't even know what is a MicroFutures. But just to clarify something here, so the MicroFutures is a new, semi-new contract on the futures markets that basically represent 1/10 of the size of the big futures contract. For example, the mini Nasdaq is 10 times bigger than the mini Nasdaq. that means that we have smaller margin requirements from the brokers, and also again the risk and the profits are also scaled down to 1/10. But the advantage that we have with the micro futures is that we can trade multiple markets with a smaller account, and this will give us the opportunity to diversify our portfolio and kind of spread the risk through different markets with different logics. Now, this cannot be done if we are discretionary traders, because if you do day trading by following indicators or your own method, maybe you can probably trade 1 or 2 hours at the most, and maybe 1 or 2 markets. The advantage to be on this portfolio is that you will have automatically done for you the trading concept that are behind the scene in a 24 hours a day trading session, basically. By the way, they just even stopped the 15 minutes break on the indexes now, so it's really almost 24 hours a day now. So the advantages for the micro futures are many. Again, the smaller margin is the number one. We can trade multiple markets with the smaller account. We can have multiple markets. We can trade non-correlated markets. So, for example, we could have gold going up and maybe the stock market going down, and so we kind of spread and hedge our risk. The hedging advantage is also for a portfolio. So I said you have a portfolio of stocks or bonds or ETFs, and so you're not trading any alternative investments. And that we had that example last year during the crash due to the COVID in February, March, and even in April, when the stock market was crashing. We did very well with our diversified portfolio on the big contracts. Okay, because we were not able yet to trade the micro futures, but that would be, the big portfolio requires $70,000 or more, and now we're basically scaling down this to 1/10 of that. So, like you will see later on, you can trade the portfolio with about $7,000 to $10,000 is what is recommended. So again, the CME is currently offering micro futures on the main markets. More to come. I think the 12th of July we'll have the micro crude light, and we have the gold. That was the first one that was already started about 10 years ago, but then silver is not super liquid. And then we have all the main indexes, the S&P, the NASDAQ, the YM that stays for the mini Dow, RTY is the Russell 2000, and then you have the euro and the yen. I want to show you very fast here the page of the CME, where you will see what is the current, as of today, liquidity in the market. And you can see that the mini S&P 500 has 380,000 contracts, the NASDAQ over 400,000, mini Dow 67, Russell 92. Now they also have the micro Bitcoin futures. That's one of my next projects, to create a system on Bitcoin, and is decent. 14,000 is not great. Gold is 43,000, is pretty good. Silver not that liquid, and the euro is the only one of the currency that I would take in consideration with 16,000 contracts per day. But there is not a lot going on the currency right now, so not the best market to trade. But we have plenty of markets already like this, especially if the crude light will come in soon, give us the gold, the crude, and all the indexes, and maybe we can add the euro, and that will be plenty of markets to work on and to create more diversification. So let me just move forward and try to explain again very quickly what are the main advantages. So we can diversify a portfolio, a traditional portfolio, with an alternative investment portfolio that before was kind of not accessible to everybody, especially if you have a smaller account. Let's say that you have, I don't know, $100,000 or $200,000 in ETFs or bonds or stocks, is a good idea to have maybe 10% or 20% of your money in alternative investment. I used to be a CTA, so for example, managed futures or hedge funds, something that is completely maybe uncorrelated with whatever's going on Wall Street, gives a smoother equity curve on returns. And so now, because we can scale down to 1 to 10, so if you go to a CTA or the hedge fund will probably ask you for 500,000 and up, and a CTA probably 50 or 100,000 and up. In this case, we can do a diversification with alternative investments with $10,000 or less. So that's the number one advantage. So this micro portfolio is composed of 5 different markets, the most liquid one that I have available so far. And I have 6 systems that are working with different logics and time frames. Specifically, the 5 trading system will work on the S&P, NASDAQ, Gold, YM, and RTY, that is a Russell 2000. These are the day trading systems. And then we have a swing system that works only on the NASDAQ, and that will carry positions overnight for 2 to maybe 5 days at the most, but usually it's 2-3 days. Again, I built the system and tested them in a very professional way. And all these systems are run only on the servers of a regulated broker. And this way we can have the best execution, and this system must be in auto execution. There's no way that I can send out emails or signals in the middle of the night or early morning. It is impossible. Now, in order to have an accurate execution and have the most comparable and best execution, we must have a server working for us 24 hours a day that doesn't go down. And in that way, you don't have to worry about missing fields, etc. So going back to the volume, is very important to have these volumes on this market, because that will allow us to have a very little slippage. Again, if somebody is not very aware of what is a slippage, is the best price, the best execution we can have is the market is not very liquid. Between the bid and ask, we can have a huge space, and so we can get killed on the execution side. Where if there is a lot of liquidity, the bid and ask are very close to each other, and maybe we'll just have maybe 1 tick or 1 point, depends of slippage. A slippage is something that goes against you, that you have to add to the commissions. But generally speaking, my experience in the long run, let's say after 1 year that you run a system, a program, or a method, you will have days or weeks where you don't have good feels and the slippages goes against you. But then suddenly you will have like days or weeks when the slippage is positive. So you can have a negative slippage, but also you can have a positive slippage. So at the end, they kind of even
Luca,
out.
Before you move on too much, let me throw in this other poll. We've got a poll just to get a sense for where you folks are with auto trading, whether you've ever done auto trading in the past or strictly a discretionary trader, or do you use both? Go ahead and click on this poll if you would. Let us know where you are in this spectrum of how much you have utilized auto trading in the past. And while the responses are coming in, I will point out that this is one way if you are actively trading your own account in stocks, options, ETFs, anything in the equities market or currencies. This is one way to incorporate futures trading without having to learn a whole new skill set, a whole new strategy for trading the markets, because it is auto executed for you. So let me go ahead and close that poll, Luca. I'll put up the results so you can see those as well. So most of our audience is discretionary traders. Some use both. No one here who actually relies heavily on auto trading. So anyway, I'll let you get back to your presentation.
Okay, perfect. So we have a lot of discretionary traders, and that's interesting. We'll talk about later on about maybe you saw in the emails. The idea is also to eventually teach a little bit how to do discretionary trading with some of the method that I created in the past. But that's another subject, maybe a subject for another webinar. So this is just like quantitative strategies, and so what is a quantitative strategy if somebody doesn't know what it is? So if a lot of you are discretionary traders, you rely probably on a set of indicators or methods or skills that can probably you can probably kind of back test some of them. You follow them in real time for a while, or you've been doing this for 6 months, 1 year, whatever it is, but you really don't know what happened 3 to 5 years ago or more. So the difference between a discretionary trader and a systematic trader is the fact that every decision that is made for the trading system is done by the code, by the system, by the computer. So in this way, we're basically removing the emotional part of the trading. So in the equation, the most difficult part to control is the motion of the trader. By using a strategy, a quantitative algorithmic strategy, you're removing the weakest link that we know is the mind of the trader. The majority of hedge funds, and I think 70-80% now of the trading on Wall Street is done in an algorithmic way. And the reason why is because you want to have at your disposal the best statistical report you can have. I mean, you want to make sure there's no guarantee, of course, that this is going to work forever in the future. Nothing can work forever in the future. So there would be something that need to be changed. But when you do a back test and you start to see that something worked for hundreds or thousands of times in the past, you know that even if it's just theoretical, there is a good chance that there's also probably going to hold up in the future. When you have a small sample of trades, even if they're real-time trades, it doesn't mean that the same set of rules are also working in the future, because maybe you go see what happened 2-3 years ago in a different market and it's not working. So a quantitative strategy is basically simply a system that is programmed as a code on a computer and is run usually on a server in order to make sure that there is no problem with crashing of the computer on your house or the internet goes down. And the quantitative strategy is created by using mathematical formulas, statistical or observations that can be coded in rules. But anyway, there are like mechanical fixed rules. And when it's time to buy, you buy. When it's time to sell, you sell. And when it's time to take the profit, you take the profit. But it's not you, it's the computer that does that for you. And that is a huge advantage. Again, the emotional trading, the part that is our emotion is the most dangerous for the final results. And if you, and 80% of you are discretionary trader, I'm sure that you notice that sometimes when it's time to respect your stop loss, and it could be just $200 or $150, then you decide not to, and maybe you make the mistake to scale in and add positions to the original stop because you don't want to admit that you're wrong, and that little small loss becomes, instead of 250, becomes 2,500, for example. And or when you have time to take a profit, you have a target of 10 points on the S&P, but then you start to see that you have already 3 or 4 points, and you're coming from a loss, and you say, well, you know what, I'm going to take $200 now because, you know, you never know. You take $200 and sure enough, the market goes up another 20 points. So all this is avoided by the fact that the system has fixed target and stop loss, and we cannot override the rules. And in this way, we just wait and see if the system and the algorithm is performing close enough to what happened in the past. And so it will never be 100% because nothing is 100% in life, but we are trying to see if we are getting close enough to the statistical results and performance that we saw in the past. So let's move on to the next slide. And so how do I build these systems? I mean, there's a lot of work going on, but very, very fast. I take a set of data that is called in-sample data. They say what happened, I don't know, 5, 6, 7 years ago or 4 years ago, and I run a series of rules and ideas on that period. And that period will give me some results. If the results are acceptable, then I run the system on a second set of data that I've never seen. So the system never saw that one. This is called auto-sample data. And if the results also are in line with the past performance, then I see that we have something good. Now, I will also stress test the system by using Monte Carlo simulation or walk forward analysis or other statistical stress testing technique that I don't want to talk about because it's kind of boring, but you want to make sure that whatever you have, it doesn't mean anything if you see good results, good profit, because it's enough to change the parameters of some indicators and everything will fall apart. So by stressing different variables, you will see that the system can hold on or not, or so and so. So it is very important to stress and see what's going on, because the market is always changing. And so the fact the market is always changing, also the indicators that you're using as a set of rules are going to change, right? They're going to change the results, and nothing stays the same in the market. And so we need to see if the market changes, can we still obtain pretty good results with our set of rules? And if this is the case, then sometimes I will run in an extra auto sample. So basically I will add an extra year that the system didn't see and see if it's still okay. And maybe I even take the set of data now and I run in the past. So I switch the data, because at the end the data in time is something that we don't know. We don't know in the past, we don't know when the system started, and we don't know the future, right? So it's like recreating the future at the best we can. Of course, we can't, but the markets are always changing. They go sideways, they go up, they go down, and they have a lot of volatility, little volatility. So the best we can is to recreate all the kind of different trading environment and see if those rules are performing well across this different cycle. Then maybe we have something good, and sometimes it works great and sometimes it doesn't. I mean, that's the reason why trading is so difficult, because the market are always changing. So anyway, so when I have these systems performing pretty well and I feel they're robust, then I put them together and see how they work together as a portfolio, like we did in this case. And I will run a Monte Carlo simulation and stress test all the portfolio. Now, if the portfolio also is showing good results and the correlations are okay and there is no other crazy stuff going on, then we go in the incubation phase, or phase of observation, where I want to see the market in real time and see if the strategies are working for a few weeks, a few months even, and see if the portfolio, the strategy are working. Sometimes you have to optimize or discard some strategies. There's some little tweaking here and there, but if that's okay after the incubation phase, then we can go live, and hopefully it will also perform in the future. So now I want to show you the performance that we obtain with the MicroFuture Advantage. You will see that we have a period of trading that goes from January 2016 to the first quarter of 2021 at the end of March. You will see that there are 2,157 trades, so there's a lot of trades. It's not just a small sample. These are the results. Net profit at 44,000, but is net of the commission and slippage. And also the drawdown that we experienced is about $1,800. And so that's the reason why the minimum capital suggested is 7,000. I scaled down the big portfolio we have, but 7,000 is really the minimum. I say the performance that we obtain is based on 7,000. Probably 8 or 9 or 10,000 would be maybe better, a little less aggressive. Somebody can even start this with 14,000, double that. It doesn't matter, but this is just to give you an idea of you can be very aggressive with this, or you can be very conservative. Let me also give you an example now of a trade that we took last week, so you understand exactly what is the meaning of micro. So this is a trade that we took like on the micro Russell, and you can see that it was a $145.50 profit. This was a long trade, and this was the exit. Okay? And this is done on TradeStation automatically. Now, if I go to the next slide, you will see that we have the result on the big contract, on the big portfolio, and this is exactly the same graph. You can see that liquidity is very, very good. If I go back here, if this was not a liquid market, you will see like little holes everywhere and not exactly the same graph, but you can see this is exactly the same one. But the result on the big one was plus 1,445, and it is exactly 10 times as big as the small one. So again, I believe that liquidity is good, and the results can be very good. Slippages shouldn't be an issue. Now, the next one is the periodical return of the portfolio starting 2016 up to the first quarter of this year, based on $7,000 capital, trading capital. Why 7,000? I mean, again, it's 1/10 of the big one, but the micro future, especially at day trading level, we're talking about $50 to $100 per margin. So the margin is really very, very small. You have a lot of leverage here. So there are very good results, but look, in October of last year, we had almost a 16% drawdown for the month. This was the month before elections. And if you remember, there was no volatility. The stock market was like sideways, waiting for the election results. And when the markets were very, very choppy and the volatility decreases, and not only this portfolio, I think the majority of the systems are going to suffer. And but after that, we did very well the following 3 months, and the first 3 months of 2021. And so these are the periodical return anyway for the portfolio. And I want to show you the equity curve starting with 7,000 in 2016 all the way up to the first quarter 2021. You will see that there are like drawdowns that are normal part of trading, but the equity curve is very smooth, because what we are trying to do is to obtain a diversification. If I believe there is a holy grail in trading, is the fact that you can trade multiple markets with different strategies, because no system will work all the time. But if you have different markets, so you have two problems here. One is that a market can stop giving you trading opportunity. You can have, like, an example could be the crude light. Last year we were making a killing with crude light or gold, but crude light kind of died, right? And so unless you're long for a long time, intraday you don't have many opportunities. So if you have a system that works great in crude light, but suddenly the market doesn't give you any more chances with volatility, then you're done. So, but if you have gold and you have the Russell and you have NASDAQ, that maybe are very volatile and they give you opportunities. So you can have a couple of market or system not performing well, but you have another 2 or 3 or 4 that are doing well. So again, I believe that diversification of strategies and markets is very, very important. So here you can see there was a flat period at the end, toward the end of the year, because it was pre-election. We have the drawdown here, and then flat, and then we'll start to go up again.
Hey, Luca, let me put up another poll here real quickly along the lines of
water.
Okay, sure, yeah, along the lines of trading results. Go ahead and let us know. I mean, are you satisfied right now with your trading results? Does an equity curve like the one that Luca just showed you, does that match what you're experiencing? Have you thought about how diversification could smooth out your equity curve, limit your drawdowns, and so forth? Just let us know where you're at on this, and then we'll move into some final sort of a summary of the benefits here. So going to wait another few seconds for the poll results to come in. Still trickling in here. Okay, looks like the voting's capped out, so I'll go ahead and close that, and there's what we've got. Hey, it's great to see half of you doing real well. Of course, there is always room for improvement, and that's great. And if you're still struggling to make money consistently in the markets, hopefully you'll see how this can be an important part of turning that around for you. So Luca, I'll let you go ahead and continue with your summary here.
Okay, cool. Okay, thank you for the poll, and let's go to the next one. All right, so I'd like to recap a little bit and telling you what are the 6 big advantages of the micro futures portfolio, and generally speaking of algorithmic or quantitative system. Okay, so number one is very important to have money management and risk control in your trading, or actually even in your investing, but for sure in trading. By using a portfolio of automatic system, we are going to cover in a systematic way, theoretically, all the different possible scenarios that could unfold during the trading session. But there's never 100%. But at least we know that the stop loss is automatic, because the risk control is there through the stop loss that is in the code. Again, there is no guarantee of anything in life. You could have another 9/11, but there are rare events, and in my experience, I didn't experience anything like that. So the stop loss is there. Is for sure a mechanical stop loss, where we are not going to say, oh, it's a mental stop loss, I exit now in the next 10 minutes, or when it goes there. That never works. And so the trader or the doesn't have to worry about not taking a stop loss when it's the time, because it is the time when the code says so. So that's it. You exit and you move on the next one. If you move on the next one, you still have capital to trade. But if you don't take the loss when it's time to take the loss, then you're going to look for a disaster, and you don't have any more money to trade or to invest. So that's number one. I work as a broker for a long time, and I work with other traders, and the number one problem that I see is people are not respecting their stop, number one. So in this case, we're out. So emotional trading is also the fact that we are basically unable to trade 24 hours a day. We are not computers, but opportunities happens right now in a global market. They are like 24 hours a day. Last year there were like a lot of stuff going on in Asia during the COVID time, and we captured a lot of moves overnight that were available to us only because we have code that the program was trading the overnight session, and we cannot do that. I mean, unless you're like a Goldman and Sachs or some hedge fund that can have a trading desk that is covered 24 hours a day with traders that are there 24 hours a day, then it's okay. But as a normal person or normal trader, you cannot trade more than a few hours a day. So you're going to lose opportunities, and the only way to capture these opportunities is through an automatic system. So also we don't overtrade. So these systems are not one of the problems that I see on the micro futures is that the contract is scaled down to 1/10, but the commissions are not scaled down to 1/10 yet. And so you cannot create a scalping system with the micro futures. Micro futures are great to learn how to trade, because even if you lose money, you lose $300 and you don't blow up your account. But you need to be very conservative on the amount of trades you do every day. So these systems are not systems that are going to overtrade. Give an example: the mini S&P day trading system trades 2-3 times a month, and other trades maybe 2-3 times a week. So the commissions and overtrading is not an issue. And we have period of time when there's a lot of volatility, and the strategies that will be more active. And there are periods when, like now, that there's nothing really happening, and the logic of the system will kind of scale down the number of trades, because they don't want to take trades that are probably not going to do well. The other advantage again is portfolio diversification. We can trade multiple markets with different systems, so different logics, different time frames. We can have a long bias S&P. We can have a sideways choppy logic for the mini Dow, and we can have a trend following for the gold, whatever it is. But you cannot do that by yourself. I mean, if you did day trading, or if you're doing day trading right now, you probably have one strategy or two strategies, or one market or two markets, and that's it. You cannot possibly do more than that. And if you're very good for you. But in the long run, I think it's very, very difficult to perform and beat a computer. And so that's one of the main advantages, the portfolio diversification. You can still do day trading by yourself, but I think it's good to have something mechanical beside you. Then again, the system, I think they're developed by the best ideas, and I have top of the art, state of the art computers and software and logics, statistical backtesting, whatever you want to call it. So I think they're done very well, and as a systematic traders, or even discretionary traders, the past performance is the only thing that you can really think as possible futures results, right? There's no guarantee that the same happens in the past, because even if you're going forward testing and you see that, oh, no, this system has been doing well in real time with real money for the last 3 months. It's going to go great for the next 3 years. There's no guarantee. It could be just a fluke. It's just a statistical fluke. Now you have a set of rules that are working now, but doesn't mean they're going to work 3, 4, 6 months from now. So the more data you have, the better it is for you. Okay, so that's bottom line, and then you can only obtain that by analyzing and doing things the right way. The system, again, are constantly monitored by me. That's the point number 6. We're always here because we're trading the markets, and I'm always here with my team, and we're observing that there is no problem with the servers on the broker, that there are no the fields are accurate. If there is any kind of extra slippage or what happened, there is could be always a little problem here and there eventually, but again, in the long run, positive slippage and negative slippage, they compensate each other, so it's never a big problem. And another thing is that the markets, like I was saying before, they're always changing. They are not stationary. So the system the market will go through a phase of high volatility, low volatility, or trending up or trending down and sideways. And so you need to adapt very quickly. And the mind of a human cannot adapt very quickly to all this stuff going on. You start to have a bias, and the bias is going to hurt you in the long run. The system doesn't have any bias, it doesn't have any emotion. So you will apply the rules. If the rules are not working anymore, I will optimize the code, or eventually even discard or put in a standby. But the system could be kind of turned off for a while and maybe substituted with another one. So let's say, they give you an example. We added recently soybeans because the grains, they're doing great. There's a lot of volatility, and volatility means money. So okay, we'll activate the soybeans. Last year, or in the last few years, the grains were not very good opportunities for us. Now the currency will explode next month. Okay, then we'll go there. But if the euro and the yen are not doing anything, then it doesn't make any sense to spend time and money on those markets. So by rotating systems and logics and stuff like that, you try to be proactive in the managing of the portfolio. And that's the reason why we are here, and the way that I develop everything. So Chris, I don't know, do you want to do anything else? Is there anything you want to add, or is there?
Yeah, absolutely. So we will take some questions here. If you have not yet typed in your question, go ahead and use the form there on your GoToWebinar panel and type that in, and we'll try and get all the questions answered before we wrap up here. I do want to recap for you briefly. I mean, it's very important to recognize all the benefits that are being put into one place here in this brand new system. This is a pre-launch offer. This is the first time that not only that this system, but that any MicroFutures trading portfolio system, as far as we know, has been offered to the public. So this is an opportunity to gain that portfolio diversification with really a very small investment, or a small portion of your trading account, in a system that has been developed with a professional approach by a top professional trader, and with a system that's constantly monitored and updated to take account of the changes that are taking place in the market all the time, as Luca just said. So let me tell you real quickly about the deal that we have for you today. If you are interested in getting in on this program, again, this is a pre-launch offer. You are the first people to ever hear about this program. So normally the cost of the MicroFutures Advantage program will be $29.97 for a 1-year subscription, but today we're taking $1,000 off of that. So just $19.97 for the 1-year subscription up to the launch date, which is July 12th. So we've got a couple weeks on that, but we've got an extra fast action bonus today only for those of you who do see how this can help your trading. You can get a second year of the MicroFutures Advantage system absolutely free. So that's 2 years of automated MicroFutures trading signals and working with Luca Fischini for only $19.97. So if you're interested in this, do give me a call. Number's 800-883-0524. Jot that down. It's right on your screen, in order to take advantage of this one-time only special pricing. And I'll look forward to hearing from you. So again, that's $19.97 for 2 years of automated trading. So I do have a number of questions pouring in here. So let's go ahead and start with Subhash, who wants to, he says he has accounts with Interactive Brokers in Canada. So will the system work for him? Do you have an answer there, Luca?
No. The currently the system will run on the server only of a broker that we're working with, that I trust the execution, and so the account must be open with a US broker. I can give the detail to the client if he wants, but no. Is he a Canadian resident?
I guess so. That's what the question indicates.
Yeah, I mean, I don't know if the broker can open Canadian resident. It's something that he needs to give us more details, and then we can forward that to the broker,
Sure.
or you can answer to him, and I'll give you the answer for that. But it's possible that as a Canadian resident, you cannot trade and open an account with yes broker. At least when I was a broker, that was the rule. I don't know if they changed it, but I don't know. I don't have an answer for that.
Sure. Well, and so there are several people with questions about the brokers. Just go ahead and give a call. We'll talk that through, let you know what the options are if you want to go ahead and set this up. I do have a question here. Can you go over the different systems that are included and what markets?
Sure. Okay, so let me go back in time here. This is the slide. Let's see. I think it's this one here. Okay, so yeah, so the systems are a total of 6 systems. So people, I think they understood from the email that this was a system or a promotion of a system. In reality, this is a promotion of a portfolio. So in reality, you're not, leasing or subscribing to one system or buying one system. You're really buying 6 systems. And so there are 6 systems on 5 different markets. So there are 5 day trading systems. So they will work during the trading session, the most liquid trading session. So there will be on the mini S&P, the Nasdaq, the gold, and the mini Dow, and the mini Russell. Again, we're working on the micro. So those are the main guys. Now we're working 1/10 of those markets. And then there is one extra system that will work on a swing. So we'll take positions overnight. They carry for 2-3 days. It depends on what's going on in the market. And so this is a total of 6 systems on 5 different markets. On the slides, you should see them. And these systems have different logic. Like, for example, the mini S&P is more like a long bias, so it will take the majority of the trades long, considering we're in a gigantic bull market, and trying to go short the stock market is very dangerous. It's not the best. But some other of the systems, like the Nasdaq or the YM, they also go short, and also the Russell. So they have different logics, and they work in different time frames too. So the Nasdaq, mini Nasdaq intraday works on a 15-minute time frame. The mini Russell, for example, works on a 5-minute time frame, and the mini S&P works on a 10-minute time frame. So, and the gold works on a 30 minutes. So there is a diversification of logics and time frames. Hopefully this answers your question.
Great. And Stephen wants to know, what are the fees, and if we want to trade multiple units, can we?
Yes. I mean, I didn't think about that, honestly, but by different, so for example, you open the account with, I don't know, $15,000, so you want to trade 2 units. Is that what you mean? Probably.
That sounds about right. Hey, by the
Yeah,
way, if you,
yeah,
Luca, go ahead
not,
and advance your slide to the last slide, just so we can get our contact information up. We're getting near the end of the time, and if anybody does have to go, we want to make sure you can jot down the, yep, there's the contact information, including Luca's website at the bottom, which has not yet been updated with this program information. But anyway, go ahead and continue with your answer.
Yeah, I don't think that you say the subscription is just based on one MicroFutures. If you subscribe and then you decide to trade 3 MicroFutures per signal, I think it's possible. It's something that I have to clarify with the broker. But again, I don't have a perfect answer for that. but I don't think it's a problem.
And as
So
far
yeah,
as fees, that would only be exchange fees. Your subscription includes all the costs as far as your side of the program goes, and the
right.
only fees they would pay would be whatever
Yeah,
trading costs are involved.
yeah. I mean, there would be still the commission and the exchange fees that the broker is going to charge. That is for sure. But we um, scale down also that. So, for example, if for the big contract, let's say the automatic systems for the big contract pays $20, for example, $25 for the swing system or one of the systems, then we scale down that to 1/10, so it'd be $2.50 or something like that for the micro. So those are the only fees that and commission that the broker is going to charge. Yeah.
Got it. And Vishal is asking, the results that you did show, those are based on all markets traded combined, correct?
Correct. Yes. That's the result of not one system, but is the portfolio combination of all 6 systems. Correct.
And do you expect that the micro markets are going to continue to grow? Is there going to be a lot of expansion in the liquidity in these markets?
I think so, because especially now if they're launching the 12th of July, the micro crude, that's going to be great. If that does well, then there will be probably a micro natural gas, and then they will follow with probably micro soybeans, and then again there's Bitcoin, but the volatility will determine where the opportunities are, and also the liquidity. So if the currency suddenly start to move a lot and a lot of people start to trade currencies, then you will see that volatility, I'm sorry, that liquidity and volume daily in the open interest is going to be going up and up and up. And not a lot of people know about the micro futures. That's the problem. I think we're just at the beginning because they just launched that a couple of years ago, but there was not enough liquidity, and now is getting better and better. So yeah, I think they're going to grow. Is the way of futures for me, because you can do a lot of stuff that is not. I'm not going to talk about this now, but you can do a lot of scale in and scale out of positions, even for discretionary traders, where you instead to use one big contract, you can use 10 micros, and you can scale out and take profits all the way, or you can scale in and start to add contracts all the way, and something that only institutional could do before, because the margin was so high. So unless you had like at least $100,000 account, you couldn't trade that way. But now with $10,000, you can do what the professional trading firm, prop traders had been doing for a long time. So that's the main
Right.
advantage.
And one of our Dean asked the question that then do you need $42,000 to trade all systems? Seems like he may have understood that it's $7,000 per market, but that's not the case, is it?
Yeah. So if I go back here, you see that the 44,000 is the total net profit after 5 years of trading, 5.5, and 3 months. No, the initial capital. So this program started 5 years ago with $7,000, and that is the minimum suggested. So let's say you cannot trade it with 8 or 9 or 10, but no, the 44 is not the margin. The margin required is again 7,000, because the margin for the micro intraday, so for example, those 5-day trading systems, is probably something like below $1,000 for the margin required by the broker for you to trade those 5 systems. So it's
Right.
very,
So
very,
you
very
can
small.
actually diversify across all 5 markets with an initial account of $7,000, give or take. And if you have more, then you may consider adding additional positions and so forth. And that will cover all of those markets at the same time. Is that accurate?
Yep, correct. Yep.
Perfect. All righty. Hey, well, we're pretty much at our 50-minute limit here. So I want to thank everyone very much for attending today. It's been great. Luca, thank you for your presentation. It's
Thank
been
you
great
guys for
having you
coming.
on here
Yep,
today.
appreciate it.
And
Thank you for attending.
go ahead. I'm sorry. I'll let you wrap
I'll
up.
say thank you for everybody that show up to the webinar and to listen to me for 30 minutes.
Yeah, absolutely. And again, just give me a call if you have questions or you want to get some more details on any aspect of what we've spoken about here. Give me a call, 800-883-0524. Ask for Chris or ask for the MicroFutures program, and we'll be happy to get you going. So once again, thank you everyone for being here today, and we wish you all happy trading.
Okay, bye everybody. Good trading, and I'll talk to you later. Bye-bye. Thank you.